Welcome back to Investing Talk Podcast. Today we're tackling a question many of you are asking: is Pony AI a good time to buy now? Before we unpack this, if you're finding our analysis helpful, please remember to subscribe, like, and comment on this episode. It really helps us out. And if you feel inclined, consider buying us a coffee. It fuels our research. Also, if there's a specific company you'd like us to look into, leave a comment below and let us know. For this evaluation, we've gathered the latest data as of late July 2025. We're looking at a pretty comprehensive assessment focused on both short-term trading and long-term investment. Our mission is to distill what's most important for you, whether you're considering a quick trade or maybe a longer-term holding in this innovative space.
That's right. We'll break down the fundamentals, look at the valuation, dive into the technical indicators, consider recent news and sentiment, and highlight both the upcoming catalysts and, importantly, the potential risks. What's fascinating here is how all these pieces fit together to paint a complete picture.
Okay, let's unpack this with the fundamentals. When we look at Pony AI, what does the financial health tell us?
Well, Pony AI reported trailing 12 months revenue of $76.48 million, with a gross profit of $11.09 million, which gives them a gross margin of about 14.5%. Not terrible.
Okay, 14.5% gross margin.
However, here's where it gets really interesting. Their net profit margin was deeply negative at negative 387.68%.
Wow. Minus 387%.
Yeah, this clearly indicates the company is currently unprofitable, with significant expenses not outweighing revenues. They posted a loss of $296.51 million for the trailing 12 months. That's an EPS of minus 0.83.
So burning through quite a bit of cash then.
Definitely. But on the debt side, their debt-to-equity ratio is 0%.
Zero. So no debt.
Which means no significant financial leverage. But this also raises an important question about their cash reserves and burn rate, given those substantial losses.
Right. How long can they keep that up without debt?
Right. Exactly. Despite the current unprofitability, though, analysts are projecting upside. We're seeing a price target range of $18 to $20 from a current price around, $15.13?
So that implies
Yeah,
potential 20 to 30% appreciation by the end of 2025.
correct. And a lot of that optimism comes from their position in the industry. Pony AI is a leading autonomous mobility company operating robotaxi and robotruck services, mainly in China and the U.S. They're in a high-growth, innovative sector, but, they face those early commercialization challenges typical for autonomous vehicle tech. Their expected fleet expansion in China, though, quadrupling in 2025, that signals really aggressive scaling efforts.
Okay, so what does this all mean when we talk about valuation? How does a company with losses like that get these kinds of price targets?
While traditional PE ratios aren't meaningful when a company is unprofitable, right? There are no earnings. If we connect this to the bigger picture, their market capitalization is around $5.38 billion against only $76.48 million in revenue.
Okay, hold on. 5.3 billion market cap on 76 million revenue.
Yep. That puts their price to sales ratio around 70 times revenue. 70
times sales. That sounds really high.
It is highly elevated, yes. But it's not entirely unusual for a high-growth tech stock in an emerging sector like this. The market expects significant future growth and eventually profitability to justify it. It's pricing in the potential.
So it's a bet on the future, basically.
Very much so. While we don't have a detailed discounted cash flow analysis in front of us, the analyst price targets and this high valuation clearly imply that the market expects very high growth and eventual profitability to justify this premium.
Okay. Beyond the numbers, what are the charts telling us about Pony AI's recent stock behavior? The technicals.
Right. So as of July 25, 2025, Pony AI was trading near $15.13, showing a positive daily move of about 4.7%. What's fascinating here is that the short-term 5-day simple moving average has crossed above the longer-term 60-day SMA.
Ah, bullish crossover.
Typically a bullish sign, yes. Furthermore, the 60-day SMA is above the 200-day SMA, which further supports an upward trend, more of a long-term signal.
So trend-wise, it looks positive. What about momentum? Is it running too hot?
Well, that's where it gets a bit mixed. Looking at momentum, the MACD is positive at 0.323, and the Awesome Oscillator is above 0. Both indicate positive momentum.
Okay.
However, the CCI is above 100, and the stochastic RSI is over 80. These latter indicators suggest the stock might be overbought in the short term.
Meaning maybe a pullback is coming?
It implies a potential for a short-term pullback or maybe just some consolidation, yeah. caution signal there.
And volatility. Is this a stock that moves around a lot?
Oh, yes. Weekly volatility for Pony AI is at 24%. That's higher than 75% of U.S. stocks.
Yeah.
So relatively high price swings, higher risk, but also potential opportunity for, short-term traders.
Right. Definitely not a sleepy stock. Okay, what's the buzz around Pony AI? Is the market feeling optimistic or cautious? What's the news and sentiment?
Well, the expectations of fleet expansion in China and the ongoing autonomous tech development are definitely generating optimism. Lots of positive headlines.
And analysts.
The consensus analyst rating is between moderate buy and buy, with that positive average price target we mentioned. So general optimism there, too.
Sounds good, but is there a but?
There is. This raises an important question. The short sale ratio is approximately 28.77%, and that's an increase.
28% short interest. That's quite high.
It is. It suggests some bearish sentiment or maybe hedging among investors. It definitely adds a layer of caution to the overall positive sentiment you see elsewhere.
Interesting conflict there. So what potential events could move the needle for Pony AI in the near future? Any catalysts?
Well, while no immediate earnings data is listed, upcoming reports are expected to clarify the company's financial trajectory. Those will be crucial.
Watching that cash burn.
Exactly. And the big one, the planned quadrupling of their fleet size in China. That's a very significant growth catalyst, a huge scaling effort.
Anything external, regulatory?
Yeah, absolutely. Regulatory developments around autonomous vehicles, both good and bad, could significantly impact them. And broader macroeconomic conditions, too. Partnerships, M&A. Nothing notable recently reported, but the autonomous vehicle sector is certainly prone to consolidation. That could always be a future catalyst.
Makes sense. Now, every opportunity comes with risks.
Yeah.
What are the key risks for someone considering Pony AI?
Okay, several layers here. Stock specific.
Yeah.
The current heavy losses, high expenses, those elevated valuation metrics, and that rising short interest we just discussed.
Got it. And sector-wise?
Sector specific. Autonomous vehicles are an emerging technology. That means high capital intensity, significant regulatory uncertainty, and intense competitive pressure. It's not for the faint of heart.
And the bigger picture? Macro risks.
Broader global economic conditions, the chip supply chain is always a factor, and even China-U.S. relations could impact Pony AI's operations and expansion plans, given their footprint.
Right. Operating in both countries adds complexity.
Definitely. And the high volatility we observed increases risk for short-term traders. On the positive side, the absence of debt is good for stability, but it highlights the reliance on cash reserves, which brings us back to the burn rate.
So after all that,
Huh.
pulling it all together,
Yeah.
What's the overall picture for Pony AI? Is it a good time to buy now, and for whom?
Overall, our evaluation gives Pony AI a score of about 5.5 out of 10, so pretty balanced. It presents a picture of growth potential alongside significant risk and those valuation concerns.
A 5.5. So right in the middle, really. What about an entry price?
If you are considering an entry, our analysis suggests an entry price range around $14 to $15 might be prudent to potentially avoid those short-term overbought conditions and maybe capture potential upside.
Okay, $14 to $15. And who is this stock actually suitable for?
Well, it really depends on your profile. For short-term traders, you could potentially exploit the volatility, but you must be very cautious of those overbought signals and use tight stop losses.
For example,
If you enter at $15, maybe a stop loss around $13.50, about 10% below entry. That would be prudent to limit losses.
and for long-term investors.
Long-term investors should be prepared for high risk and significant cash burn in this early phase. This stock is suitable if you are fundamentally bullish on autonomous technology and believe in Pony AI's market execution capabilities. For take-profit targets, maybe consider near analyst highs of $18 to $20, or perhaps adjust dynamically based on momentum indicators as things develop.
So sum me up.
In summary, Pony AI is a promising but speculative play in autonomous vehicles. It has strong growth catalysts, particularly with its fleet expansion, but significant near-term financial risks and valuation concerns. That 5.5 score reflects that balance. High risk, potential high reward.
That was a truly comprehensive look at Pony AI. It's clear this isn't a simple yes or no answer, is it? It's really a nuanced situation depending on your risk tolerance and your investment horizon. As the autonomous vehicle market continues to evolve, Pony AI represents an interesting case of future promise versus present challenges. Makes you wonder, given the high capital intensity and regulatory hurdles, will the future of autonomous mobility be dominated by just a few giants, or is there still ample room for innovative, albeit unprofitable, players like Pony AI to eventually carve out significant market share? What do you think? We hope this analysis has given you the insights you need to make your own informed decisions. Thank you for joining us on Investing Talk Podcast, and we look forward to next time.